All right, so this chart is showing Facebook's stock price from February 2018 until today. Facebook is the white line, and the S&P 500 is in the green, and the technology sector index is in the pink, just for perspective. Looking at the chart by itself isn't too helpful, so the yellow dots show significant events in this time frame that drove the price action of Facebook stock. So the first point is when the news of the data breach broke out, and the second one is when the FTC probe was announced. The third is when Congress testimony was announced. The fourth is when Zuckerberg controversially said that users own their own data. The fifth is investors start looking past the data breach, and you can see the stock price is starting to move up after that. The sixth is investigations into Facebook are deemed to only be headline risks. So again, Facebook saw positive price action after that. Seventh, the news of Facebook broke out that the insiders sold over $4 billion in company stock since that scandal, which set them back about 19%. So that you could see that large dip there. Facebook's margins were also shrinking. That's the eighth point. The ninth is when Facebook was sued. The 10th is when Zuckerberg starts to go on the offensive. So that's when you start seeing a turnaround again. They saw another setback on the 11th point when there were Google antitrust rumors, which sent the stock down again. And then the last point all the way at the end shows the recent strong earnings and the positive price action after that. So now we're going to move on to some key metrics and performance. Here are some key stats when analyzing Facebook stock. The beta is 1.32, so this means that they are slightly more volatile or have slightly more correlation than the market. The PE ratio, we're going to be talking about that a little bit later on, but their range is about 21 to 31. They don't have a dividend because they are a growth company and investors aren't demanding a dividend from them, and they believe that, or Facebook believes rather, that they can better allocate capital by reinvesting into the business and with share buybacks. Facebook's been a free cash flow machine over the past 3 years with a year-over-year growth rate of 24.4%. Now, in terms of performance, over the 3 month, they've traded at 2.65%. The 1 year, 26.38%, and over the 5 year, 153.82%. Now, we're going to compare Facebook to the industry. So, their PE ratio of 22.85 compared to the industry at 36.73 shows that Facebook is very undervalued. And just to be clear, this PE ratio is showing the 3Q 2019 trailing 12-month diluted EPS from continuing operations. Moving on to market cap, this shows the size and scale that Facebook has, and it's only rivaled by Google, which operates with a slightly different business model. Now, compared with return on equity over their competitors, Facebook is clearly in the lead in this category. They have a 27.67% return compared to the median of almost 17%. Now, probably one of the biggest factors for Facebook is their revenue growth rate year over year, and they are above the industry. So they are outperforming the industry by about a percentage point, which is still great which is still an amazing growth rate with their size. So continue on with growth metrics. A good way to analyze Facebook's growth is by looking at their daily active users, and in our opinion, that's the best measurement because it shows the success of the Facebook platform and displays how crucial Facebook's platform is to the daily lives of their users. Facebook in the last quarter reported 1.6 billion daily active users, so to put that into perspective, 20% of the world's population uses Facebook daily. This is a number that has grown 9% year over year, with the growth mostly coming from emerging markets like India, Indonesia, and the Philippines. Now, to see how that growth translates into revenue, since advertising revenue makes up about 98% of Facebook's total revenue, it's the most important metric to look at when we're analyzing Facebook's growth. In the APAC and rest of the world region, grew at 34% and 35% respectively year over year. And that was due mostly towards product optimization and favorable economic conditions. And North America and Europe grew at 27 and 24% respectively year over year. To add, Facebook's other revenue sources grew by 43% year over year, but that still only makes up about less than 2% of their total revenue. But this was mostly caused by sales with their Oculus Quest, which is their VR. Now, moving on to catalysts and risks for Facebook's future stock price. So, the main catalyst is the shift to the digital ad spend. The future of Facebook will largely rely on whether or not advertisers will continue using the platform. According to eMarketer, the growth in digital ad spend in the coming years will surpass traditional media and is growing at a 12.1% compound annual growth rate. So it's growing really quickly. Facebook is by far the largest social network, and it's continuing to grow rapidly, as we just went over. Facebook and Google are really the only two games in town when it comes to the digital ad market. They have just shy of about 60% of the market share. On top of scale, Facebook provides advertisers with meaningful insights and targeting capabilities that traditional media does not offer. So we see this as a major catalyst in increased growth for Facebook. Another catalyst we see is Instagram. As many of you know, Instagram has been probably one of the best acquisitions in history. They bought it for only $1 billion in 2012, and it's grown to an estimated value of $100 billion today. This shows Facebook's ability to see value for future acquisitions and what platforms would be compatible with Facebook. But Instagram itself is rapidly growing and testing ways to monetize and make their platform more interactive with stories. They added an Instagram shopping feature, where users can buy products directly from the Instagram platform. And businesses that have used this experience over 1,400% growth in traffic and a 20% increase in revenue. So this is new, and it's going to continue to grow rapidly, especially with results like this. Also, they're expanding ways to monetize by allowing businesses to create customizable and interactive stories with swipe up links directly to DM and Messenger so that they can interact with businesses as well. Another reason to buy Facebook is that it's very undervalued currently at the moment. Put into perspective, Facebook has a PE ratio and a 38% of 22 PE ratio and a 38% revenue growth rate, while McDonald's has a negative 8% revenue growth rate and is commanding a higher PE of 25%. Lastly, Facebook is continuing to invest in high growth areas. Oculus is their augmented reality / VR business, and the Libra project, where they're experimenting with cryptocurrencies. It shows Facebook's ability of experimenting and implementing disruptive technologies into their business model. Now, moving on to risks. The biggest risks we see for Facebook is the uncertainty when it comes to regulation. We explained earlier that what happened with the Cambridge Analytica scandal in the 2020 election cycle, possibly causing for future dilemmas. However, after going through the previous scandal that Facebook went through, Facebook's management team is now more prepared to deal with any sort of backlash. Facebook's business is also very complex, and most government officials don't understand Facebook's core business, as this was seen during the congressional hearings. This allows Facebook a unique position to work with regulators to set common sense regulations and standards of practice. Facebook is closely working with the FTC and other organizations to cooperate. However, politics aside, it was broken out. News broke out that if Elizabeth Warren wins the nomination and her big tech antitrust plan comes into fruition, it would be an existential threat to Facebook. Mark Zuckerberg came out and told Facebook employees that if this were to be the case, that Facebook is ready to stand their ground and go on the offensive. As shown in this graph, Facebook has ramped up their lobbying efforts since 2016 to make sure that their voice is heard and to make sure that they have regulations and people looking after them in the government sphere. Now, Facebook's core business relies on the ability to attract people to their platform, so any slowdown in growth and retention is going to significantly impact their business. Also, data breaches are a significant risk to Facebook since they hold so much data. However, this risk is one that every company has to deal with. Facebook has a talented team with lots of resources to ensure data security. Okay, now moving on to our recommendation and conclusion. So so Facebook is currently trading at $191 a share, and according to our simple DCF model, we're projecting a 52-week price target of $245. This represents a 28.27% upside, and it's slightly more bullish than the analyst average. All right, thank you for listening. Does anyone have any questions?